Okay, so this piece lays out a pretty compelling investment thesis. It's got two main drivers, this potentially massive trillion-dollar tariff refund hitting 9 specific stocks, and then some updates on tech and safety plays.
$1 trillion? That definitely catches the eye. That headline, Buy Heavy, 9 stocks to buy with $1 trillion boost, is strong.
It really is. Huge promise. Which makes the structure we're going to talk about first even more critical, you know? Does it fully support that big claim?
Yeah, that's a good question. Because I did wonder if maybe the way it's put together kind of waters down that $1 trillion impact a bit.
I think it does, yeah. The structure, well, it risks diluting the huge significance of that main legal catalyst, the trillion-dollar refund, because it mixes in updates on unrelated tech stocks too early on.
Okay, I see what you mean.
So the material does a good job setting up the legal background, right? IAEPA, the lower court rulings, the $162 billion already collected, even the Treasury Secretary's $1 trillion estimate.
All the heavy-hitting facts.
Exactly. And it starts listing the stocks that get hit hardest, Walmart, Lululemon, Home Depot. But then, bam! Before you even finish absorbing the potential impacts on these value names, it jumps to Trade Desk, Oracle, and Supermicro.
Ah, right. TTD, OCL, SMCI. That's quite a shift. It does feel like an interruption.
It really breaks the tension. You build up this high-stakes legal drama, Supreme Court hearing in November, ruling maybe by year-end. And then suddenly we're talking cloud computing?
Yeah, if that $1 trillion boost is the main event, pulling away like that kind of kills the momentum, doesn't it?
It works against the core thesis. So the weakness is clear. That jump just interrupts the urgency, the whole narrative flow around this massive potential refund.
Okay, so what's the fix?
Well, our suggestion is pretty straightforward. Dedicate a solid, continuous block just to the tariff refund analysis. Finish the whole story.
Meaning?
Meaning, lay out the Supreme Court timeline, talk about the risks, the whole Trump appointments versus court neutrality angle, get through the full list of stocks that benefit, explain how they might see profits surge, then you transition.
Keep it all together, like one solid chapter on the tariff opportunity?
Exactly. Treat it as one complete investment theme before moving on.
Okay, but let me play devil's advocate for a sec. If you spend, say, 10 minutes just on tariffs and retail stocks, do you risk losing the readers who showed up for the sexy tech names, the AI stuff?
That's a fair point. But the key is to frame that trillion-dollar opportunity as the headline thesis, the main reason we're here, tying back to that buy heavy idea. You deliver fully on that promise first.
So how do you make that separation clean?
Well, concretely, you could first present the whole IEEPA, the tariff refund argument, and all 9 of those value stock picks, Walmart, Lulu, Nike, VF Corp, Home Depot, Best Buy, the whole group as one complete investment idea.
Fulfill the headline promise up front.
Right. And only after you fully landed that argument, you make a very deliberate, very explicit transition.
Like putting up a signpost for the reader?
Exactly, like that. Use clear transitional language, something like, okay, with that major policy-driven value opportunity laid out, let's now pivot, or shifting gears from value recovery to growth drivers. You signaled clearly that you're moving to the next distinct idea.
Got it. That makes the structure much tighter, keeps the focus on that trillion-dollar catalyst initially.
Precisely. Now, speaking of that catalyst, it hinges on some pretty complex legal interpretations, right? About emergency powers and trade deficits.
Yeah, it gets into the weeds of the IEPA. Constitutional questions, how trade actually works. It's not simple stuff.
No, it's definitely not. And the analysis itself is sharp. It makes a good case about the lower courts overturning the tariffs, arguing for judicial neutrality.
So the substance is there.
Absolutely. But this brings us to our second point, the tone. The very engaging, very informal conversational style. Sometimes it feels like it slightly undermines the seriousness of the legal and economic points being made.
Ah, okay. So the style that makes it readable might also detract a bit?
Potentially, yeah. Look, the casual tone is great for connecting with the audience, building rapport. But the weakness is when that highly colloquial language gets applied to the really complex technical source material.
Like the examples you pulled out?
Exactly. Calling the ISEPA this major piece of legislation a bad meme coin, or summing up decades of trade deficit history with Americans love to buy all the shits.
Right. It's funny maybe, but does it sound like serious investment analysis when you're talking about a potential Supreme Court case and $1 trillion?
That's the rub. It can detract from the authority you need. The core legal argument is serious. Is a persistent trade deficit really an unusual and extraordinary national emergency under the law? That's a heavy question.
So the language needs to match the gravity of that specific point.
Precisely. So the suggestion isn't be boring or lose the personality. That energy is good. It's about calibration. Calibrate the tone to match the sophistication of the legal and economic foundations when you're discussing them.
Okay, but isn't there a risk there? If you suddenly get very formal or academic just for those parts, could it feel jarring? Might you lose that audience connection you worked to build?
It needs to be done carefully, surgically, as you said. Maintain the enthusiasm everywhere else. Be accessible. But when you're laying out the factual basis, the law, the economic principle, the court precedent, elevate the language just for that moment.
So the listener feels confident that the analyst respects the seriousness of the issue.
Exactly. They need to trust the analysis, especially with stakes this high. You can still be engaging, but precision matters when discussing the legal linchpin of the whole thesis.
All right, so how do you actually do that? Give me some concrete examples.
Okay, two clear things. First, when you introduce the IEPA, maybe briefly frame its history, 1977 Act, its original purpose. Do that professionally before you get into the current political controversy around its use. Don't call the law a meme coin. Maybe describe the challenge to its current application in more measured terms.
Context and careful wording. Got it. What's the second?
Second, on the trade deficit point. Instead of overly casual summaries, lean more heavily on the actual quote provided in the source material, the idea that, from a judicial perspective, trade deficits is not a national emergency. It's just economics.
Use the source's authority to make the point.
Yes. Emphasizing that judicial viewpoint lends the necessary weight and seriousness to support the investment conclusion. It shows respect for the core legal argument.
Makes sense. Calibrate the tone for the technical foundations. Okay.
Right. Now let's shift gears a bit. Talk about the overall strategy presented. Toward the end, there's this really excellent observation about the market potentially shifting.
Yeah, the point about the Magnificent Seven stocks being kind of flattered down lately, while the market seems to be broadening out into other areas?
Exactly. Broadening into value sectors, healthcare, energy, real estate are mentioned. That's a sharp, timely strategic insight.
It is. Very relevant right now. But, well, it felt like this crucial idea and the related barbell approach it introduces comes really late in the game, almost like a concluding thought.
I completely agree. That's the third main critique point. The introduction of this sophisticated barbell approach, half high risk, high return, half ultra safe, it's placed so late that it loses a lot of its potential impact as a guiding strategy for the whole portfolio.
Yeah, it doesn't feel like it informs the stock picks that came before it.
Exactly. That's the weakness. This powerful observation about a market shift and the need for a barbell strategy feels tacked on at the end. It should be the framework that explains why we're looking at certain tech names and certain safety names, right? Not just a final comment.
So it feels less like a strategy guiding the selections, like TTD, Oracle, SMCI, plus the later safety ones, and more like an interesting observation after the fact.
Precisely. It should be the anchor for the second half of the discussion after the main tariff story. The barbell strategy, holding both aggressive growth and solid safety, should justify the whole mix of stocks presented after the initial 9 value plays.
Okay, so suggestion is?
Bring it forward. Introduce the major shift observation and the barbell approach much, much earlier, right after you've concluded the big tariff value stock section.
Use it as the organizing principle for everything else.
Yes, use it to segment the analysis that follows. It gives structure and strategic rationale to the rest of the stock discussions.
All right, how would that look, practically speaking? How do you make it clear that these different stocks are part of one coherent barbell plan?
Well, one concrete way is to frame the analysis of, say, Oracle and supermicrocomputers, the ones benefiting from that huge $364 billion AI data center spend, explicitly as the high-risk, high-return side of your barbell.
Ah, so you label them. This is the growth engine part.
Exactly. It tells the reader why you're talking about these specific growth names now. They fit this side of the strategy.
And doing that immediately sets up the expectation for the other side of the barbell, right? The safety component.
Perfectly. So right after discussing those growth picks, you immediately establish the ultra-safe side. You could explain why certain sectors are chosen for safety now.
Like healthcare and energy?
Right. Mentioning, for example, that UNH is up significantly, or energy names like Valero or Chevron have been strong recently. You explain why these are maybe preferred over, say, utilities right now, for portfolio safety if there's a market pullback.
So it makes the inclusion of names like EOG, CVX, UNH, NVS feel totally intentional. Part of the plan.
Exactly. They aren't just tacked on. They're the deliberate counterweight in your barbell strategy. It transforms the back half from just a list of updates into a coherent portfolio allocation approach.
Okay, that elevates the whole thing. Using the barbell as the actual structure provides immediate context. It turns it from just stock tips into a strategic plan.
Absolutely. So, wrapping up, this was a look at how to really maximize the impact of what's fundamentally a fantastic core idea, especially that buy-heavy, trillion-dollar catalyst.
Yeah, a really strong foundation. Our feedback centered on 3 main areas to potentially enhance it further.
Right. First, really sharpening the focus and urgency by keeping that whole trillion-dollar tariff story, the legal case, the stocks, all together in one continuous block right at the start. Don't break the narrative.
Second, just slightly calibrating the tone. Keep all the energy and engagement, but lift the language a notch when discussing the critical legal and economic underpinnings to really solidify the authority and credibility.
Yeah, match the language to the stakes, especially on the legal points. And finally, the third piece, bringing that excellent barbell approach insight forward. Use it much earlier as the actual structural framework to organize and justify the mix of growth and safety stocks discussed later.
Makes the whole thing feel more integrated, more strategic. These are definitely high-level but actionable suggestions. Implementing them should really boost the overall robustness and impact of the material.
We genuinely think so.
So we encourage you to take these ideas, rework the structure and tone a bit, and please definitely submit the updated version back to us. We'd be very interested to see it in a follow-up critique.